Then there are other aspects that are not really tied on to specific business, but to almost small businesses, what we call turnover taxes. So if you're a sole proprietor, basically...
The one that was stopped by the court?
They stopped the minimum tax.
Or is the minimum tax?
The turnover taxes was there before. It's been there for a while. And when it came, what happens is basically if you're a sole proprietor or a partnership, and your turnover is less than 5 million in a year, then they tell you will pay turnover tax at the rate of 3% of your gross sales, monthly sales. So you pay it again by the 20th of the following month. So 3% of your gross sales is what you pay as turnover tax. And then this is how it becomes basically different. Once, as a business owner, once you pay turnover tax, you don't pay income tax. So if you come today and say, I'll be paying turnover tax, there's no income tax. There is pay.
So I'm just trying to figure out in terms of profitability of this business. If it's not making profit, it will not be able to pay turnover tax. So
no, they'll still pay turnover tax. Turnover tax is independent of your profit. You're paying 3% of your sales as tax. You're not paying 3% of your profit. It's 3% of your sales.
But even on negative,
it doesn't matter.
It does not matter.
As long as your turnover for the year, annual sales for the year are less than 5 million, you're obligated to, you're actually on the turnover tax regime. So you pay 3% of your sales as profit. It was reduced last year after the pandemic from 3% to 1%.
Oh, I get it.
So another key thing that changed about the turnover tax, they added the element of even entities that are VAT registered and would want to be on the regime of turnover tax, they can also choose to be on turnover tax rather than income tax. So you can actually be on the VAT regime and also on the turnover regime. So you'll pay 1% of your gross sales as taxes, but at the end of the year you will not pay any income tax. So those are the taxes we call final taxes. They are basically, once you pay turnover tax, there's no obligation to pay income tax.
Yes. And the difference between or rather turnover tax and minimum tax, which was stopped by the court, is what?
Good. So minimum tax was a blanket, so it was far-reaching. It was for everyone. It was, as long as you're in any form of sort of business, as long as it's not. There are some exclusions. Businesses that have prices controlled by the government, and this would fall back like petroleum. Petrol stations have prices controlled by the government. If you're also doing the rental income tax, you're not eligible for minimum tax. It was a far-reaching thing. So essentially, the goal here was, for example, there are these businesses that are on income tax, but perennially they've always been declaring losses. So the goal was to have all these businesses and together pay 1% of their sales as minimum taxes. And this is where it gets I think, just becomes a bit more murky. So how minimum tax was working is that if, say, for example, you are doing your business and you normally you would be paying installment taxes every quarter. If the minimum tax that you ought to have paid was higher than the installment tax, then you end up paying minimum tax and not the installment. So it was a balance. So they were trying to say that it was like it was a balance. So you either pay installment or minimum tax, whichever is higher. So it was an all-encompassing sort of thing. It was trying to cast the net wider to encompass everyone who pays taxes. Yes. So the way it failed is that because the element it comes that you are taxing businesses that are trying to startups that are trying to make some money. So who are still in the first few years, there'll be loss. There'll definitely be an element of loss. We're trying to tax them further, which was not proper. Yeah. In my view, it's not that in my view.
It is also in my view. So, yeah. Do county governments have any forms of taxes?
So those ones let me call them for me levy. Just come as levies. Every county has its own sort of structure. Whatever levies they impose, and they impose it on different elements. It can be what you call cess. That's on goods that are carried from one county to another and whatever. So then they charge those parking. All those are elements that are dealt with at the county level that are not really, do not have there's no linkage to taxation at all. So if you pay a levy at the county level, it's an expense. In the business, for us as accountants, we just look at them as expenses. If you pay for a business permit, that's an expense to us it's just an expense in our records. They do not help you offset any taxes in your books. Yeah.
Very good. I think I've exhausted my questions. Unless you have something that you want to put out there as a parting shot to the businesses.
Great, thank you. So I think the taxation is not. We have barely done a lot on taxation, but I think whatever I've covered on is sort of gives you a sort of an entry gate into taxation, and how taxation, and there are things that I like to touch upon, even add on. So, for example, no one sort of is exempt as an individual. No one is exempt from tax. So let me give you an instance. Churches, as a church, if you pay your pastor a salary, the salary has to be taxed higher. The thing is, churches, when they collect money, that money is exempt even from income tax, because churches are educational institutions, depending on which education is a public education institution. The collections from churches are tax exempt. But when you use that money from the tithe, from whatever, when you use that money to pay your pastor, that pastor has to pay income tax. So you deduct pay as you want from the pastor. There's no one who is really exempt from paying income tax as long as they're earning money in Kenya, which is very, 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 very important. So there's this element where pastors do not pay. They should pay taxes. It's a must. It's very, very important. Then there's aspects I need to understand. So, for example, consultants, which is now some of the things that have been happening. So you work as a consultant, a doctor, an engineer, an architect. So what has been happening is that they've been working in the sense that then what happens is that when they get paid, whoever is paying them withholds a tax called the withholding tax, which is 5%. But how it works is then the rule in that is that if as anyone, if you pay someone as a consultant any amount of money that is more than 24,000 in a month, the obligation is to withhold 5% from that payment before you pay him, and pay it as withholding tax on his account, on his behalf. So, for example, if I engage you as a professional and I pay you 100K, before you pay the 100K, I'll have to withhold 5%. That's 5,000. I'll pay this 5,000 as withhold to carry and say I've paid Eric. I've paid Eric 95,000, and I've taken 5,000 and put it in his account. So that 5,000 will reflect in account as tax. It will reflect in Eric's account. It's sort of an advance tax. You've paid something. You've paid taxes in advance. Then you, as Eric, at the end of the year, or at the end of the year, what you need to do is assess. This year I earned 100K from Wilson, but to earn this 100K, I spent this amount of money. So I say I spent 50,000 as a cost, the profit for there is 50,000. Then the 50,000, I take 30%. That 30% is 15,000. I'll have to pay government 15,000. But before paying the 15,000, I'll offset the 5,000 that Wilson had withheld. So I'll only pay the government 10,000. So withholding tax, which is very critical even for consultants, it's not a final tax. It's sort of an advance payment of taxes on your behalf. People never understand that, because you end up having doctors or professionals who are working jobs, one job here, one job here, one job here, artists, designers. Yeah. But now when they get paid, then whoever is paying them has withheld the 5%. But then they think that 5%, I have paid my taxes. You're not. That 5% has just been paid on your account in advance. You, as the taxpayer, need to pay the difference at the end of the year. You need to do your accounts and to pay the difference at the end of the year.
So just to make it clear on that aspect, so the 5% that has been withheld and the 10% that is the balance is under which category of tax?
Again, so this is still income tax. Everybody pays income tax. So withholding tax is an advance payment of your income tax.
Of your income tax.
Exactly.
Okay. Very well.
Yeah, that's very. So I think that's there's certain elements will that are still here and there. So there's what we call capital gains tax, which is levied on capital transactions, so basically property transfers, even share transfer, some share transfer. So it's a tax on the profit made from capital sales. So if you buy a property and sell it at a profit, the profit you make is taxed at capital gains tax, which is 5% of the profit made in a sense. So there are other elements of taxation, but what we've discussed about income tax is fundamental and it's very basic, and I think business owners will appreciate that. As a parting shot for me, thank you so much for this opportunity. I'd like to tell the viewers also that I'm a consultant. I'm a certified accountant. So what I do is I help businesses keep their books properly. So we provide sort of outsourced accounting services to help you maintain your books on a monthly basis, on a regular basis, just to make sure that you're keeping proper records, and also for you to understand how the business is doing profit-wise. Then we also help you understand your taxation or your tax obligations. We help you assess your tax obligations. So if you're owed to pay VAT, we tell you that you ought to pay VAT, and we assist you in filing those returns every month, VAT returns, pay-as-you-earn returns every month. And we also help you do your payrolls on a regular basis. So you need to understand how much to pay an employee. We help you do the tax calculations, give you a payroll, and give the employee a payslip. And you help that will be very useful for you, and will make your work easier as a business owner. So we help you do all that. Yeah.
I think we'll be able to share your email address on the platform so that they can be able to reach you.
Yes, that's fine.
Whenever they want to.
Yes, yeah.
Otherwise, we are grateful also. Thank you very much, Wilson, for giving us the opportunity to have this discussion.
Yes, welcome.